Hey, what's up, everybody? Joe Steele, Crypto in the House. It is Monday, the 15th of August. Hope all of you are doing well. Obviously, wanted to jump in to start with some crypto news. And as one might expect, um, the big story today so far is one of the bigger stories, I guess, is Celsius. What we are seeing with Celsius. Celsius Network coin report shows a balance gap of 2.85 billion. I'm not sure if you're watching, but the Cell token is, pretty much on fire lately, and trying to figure out what's going on here. The latest findings could brew more trouble for the crypto lender for allegedly misleading and offering incorrect details in their court documents. So a new bankruptcy coin report filed yesterday, showed that Celsius's debt stands at 2.85 billion, but their initial bankruptcy filing claim was 1.2 billion of a deficit. So basically net liability 6.6 bill, total AUM 3.8 bill. With a bankruptcy filing, the firm shows 4.3 billion in assets against 5.5 billion in liabilities, which is the 1.2. So now we're also noting that, over 100,000 Bitcoin deposited by investors. Company lost 62, almost 63,000 of them, and only holds a little less than 38,000 of Bitcoin. Wrap Bitcoin represents 64% of their Bitcoin debt. So again, always something lately with this, never-ending saga. Hopefully, it'll shed some light on all these questions everyone might have, myself included. But again, that's kind of a big one for me today. Just wanted to hit that first. Simon Dixon, who's been an early investor, obviously, in Celsius, has been great about, making the rounds on telling his side of things and what he knows and what he expected, what he predicted. He put a tweet out today saying, people were upset when he said Celsius is missing a lot of Bitcoin and that those sell valuations were fake. So basically he's saying like, hey, look, I was warning people of this. 438 million of the whole is assuming they can dump the sell for $1. We'll see what is going on here, but he's definitely a good follow if you're not following him, to kind of stay on top of this Celsius news. And I will do the same and keep you all updated with what I read and report to you. Canada, if you looked here today, they're the CSA, the Canadian Securities Administrators. The regulators are expecting commitments from crypto trading platforms that pursuing registration. So looks like Coinsquare Capital, Crypto.com, any of these companies, these platforms have to provide a pre-registration undertaking to their principal regulator to continue operations while their application is reviewed, meaning these platforms agree to comply with terms and conditions that address investor protection concerns and are consistent with requirements currently applicable to registered platforms. The CSA is seeing that as what they're doing to protect investors in their country. And whatever your opinion is of getting involved in regulating, that's their prerogative. But clearly, what they're doing as a first step, or one of many steps, obviously they're involved in a lot themselves, but trying to take this proactive approach to anyone trying to register as a platform in their country. Moving into the Philippines, their central bank sees crypto's potential for improving domestic and cross-border payments, remittance payments, but they're still negative about accepting crypto as legal tender. Their central bank wants to promote education, and as the authority sees a lot of benefits associated with crypto and the blockchain. This is what they told Cointelegraph, and that they want to improve the delivery of financial services, payments, and remittance, as this potential has to provide faster and economical transfer of funds for both domestic and international settings. So again, while falling short of saying we want to, have legal tender crypto, we are, certainly open to this idea of, these quick and easy and economical cross-border payments and domestically, as mentioned. So here, Mark Andreessen put out a blog post today regarding WeWork, and their founder is now launching a site or a platform called Flow. And in this blog, Mark says, they were, Adam's first venture was WeWork, and connecting people through transforming their physical spaces and building communities where people spend most of their time, their homes. Residential real estate is ready for a change. Basically, he sees Adam's idea at WeWork as a way to revolutionize the residential world, as one would argue Adam did with workspace and shared workspace. So shelter is one of our most basic needs in a world where limited access to home ownership continues to be a driving force between inequality and anxiety. Giving renters a sense of security, community, and genuine ownership has transformative power for our society. When you care for people at their home, provide them with physical and financial security, you empower them to do more and build things. Solving this problem is a key to increasing opportunity for everyone. A lot of landlords, even in the residential world, small multifamily, single family, will tell you, like, when you do go talk to your tenant, if you don't have a property manager, you always want to, tell them, insinuate this is their home, this is their space, asking permission to go in. You might own it on title and carry a mortgage or own it outright, but you want them to feel like they have some sort of an ownership, pride of ownership, and take that same pride into where they live and make that a good experience for them. So, the Flow website doesn't have a ton. It just has a link to join us and learn more once more details are released. But, again, it's interesting to see what he will do from WeWork to now this. And, Mark Andreessen putting a good deal of money into this as rumored. So we will see where this goes. Wells Fargo, who's been, you probably know someone who has a Wells Fargo mortgage. According to Bloomberg, this is one of those unnamed sources. They're saying that, they're looking to reduce their ties to outside mortgage firms, which is about a third of its new home loans this year. They're basically evaluating the size of its mortgage business in light of the smaller originations market. Number of scandals, with Wells Fargo. But, we will see whether it was these sort of scandals that pushed it, or perhaps that people, a lot of lenders are not really busy right now. They're just kind of sitting around looking for business, whereas the last 2 years, business was falling in their lap and they didn't really have to, go out and solicit. It was just coming their way. But they do point out here that Wells Fargo, leads commercial banks and mortgage activities. But, Rocket and United Shore originated more last year. Their Wells Fargo share slipped 4% and outperformance of the 10% drop for the broader S&P. Compass, which is a very large real estate firm, they've already, downsized a bit, but their stock plunge as they seek more than $300 million in annual cost cuts, given the challenges of the real estate market that has faced this year and the likelihood that this will continue. Their CEO put out a statement today. They're hoping to be cash flow positive next year. They want to do all these reductions, more than $300 million by the end of this year. They certainly grew very quickly. And, I'm sure if you're in the States, or you might have a few Compasses in your, a 5-mile radius of you. So they certainly built quickly. A lot of agents jumped and went to their firm. They offered some very good packages for people to leave other brokerages to come to them. And who knows what that might be. But again, it could be very Wells Fargo-ish in the sense of the demand just isn't there like it used to be. And, they may have built too quickly. But we shall see if they can get this under control by next year. You don't want to see anyone lose their job in any capacity. But unfortunately, that's what happens when we're going to start, or we have seen some downturns. California Association of Realtors just put this out too, just kind of giving a overall snapshot, and that's on the next screen. But essentially, the 15-year lowest level in second quarter 2022 was the 15-year lowest level as home prices set record highs and interest rates surged. So 16% of California households could afford to purchase the median price home in Q2, which was down 24% from Q1 and 23% down from Q2 last year. So basically, you need a little less than $200,000 to make a mortgage payment with your, principal, interest, tax, and 30-year fixed conventional mortgage, but at this 5.39% interest rate. Basically, 1/4 of California home buyers were able to purchase a $677,000 median condo or townhome with the annual income of a little over $152,000 to make that payment each month. And you can kind of see the breakdown here, an infographic they put together. So housing affordability in California has never been, most people will think it's never been affordable. But again, those are the stats. Again, share more when I hear more. But again, it's a lot of money, $200,000 to, with that $883,000 price, and such a low amount of people can actually afford that. Some people in other states will think that's crazy. One, the price of the house, and two, the amount of salary. But that's just how some of these bigger markets are in New York. Citywide, go to San Francisco, blah, blah, blah. So with that, I hope you all have a great rest of the night. Thank you for checking out the stream. If you like this content of the crypto real estate, which I kind of try to do half and half and intersect and overlap them when I can find those kind of stories. But subscribe to this channel. Let me know what you think in the comments, and I will see you all tomorrow, and hope you have a great rest